Two traders, same stock, same entry, right here. Same stop, right here. And they're both about to be wrong. Stock drops and stops both of them out. One of them loses 40 bucks, the other loses 400. Same trade, look at the chart. It's identical. So what was different? This one number, position size. And that's it. One guy had the right size on, the other guy had 10 times too much size. Same exact trade, 10 times the damage. Most people pick this number by accident. The pros decide it on purpose before they even click buy. So let me show you exactly how they do it. Let's start with how most people size a trade, because I did this too when I first started. Find a stock you like, you get excited, and I'll grab 1,000 shares. A lot of brokers default to that. Like there's just 1,000 in there, you hit buy, doesn't matter the price of the stock, doesn't matter the range of the stock, nothing matters. Why 1,000? No real reason. It was just filled in on my brokerage account. It's a nice round number, feels right. And that's the whole problem right there. You just let your excitement pick your size. You have no idea how much you're actually risking. So when the trade goes against you, the loss is whatever it happens to be. And usually it's way more than you ever meant to lose. So here's the flip. And this is the entire secret. You decide how much you're willing to lose first. The shares come last, okay? It actually comes after we enter the trade. So I'm going to refer to this trade plan from the previous video. If you didn't check out that video, check it out. It's very important on the value of cutting losses. But it's also a great example when it comes to position sizing. Now, before I think about anything else, I pick one number. The most I'm willing to lose on that trade in dollars, okay? Not on the chart, it's dollars. This is an amount where if it's gone, I shrug and move on. Doesn't wreck my day, doesn't wreck my account. That number, which is going to vary for all of you, and I want you to think about it deeply, okay? Think about it. Look at your account. Think about your goals. Think about your risk profile. But that number, my max dollar loss, is the boss. Everything else bends to fit it. If the stock hits that stop, I lose that amount and not a penny more, barring a little bit of slippage, okay? Because I sized the position before entry to make that true. That's the whole methodology right there. Now, don't worry. The math is really simple. Let me show you on the chart. Take your max loss, say it's 100 bucks. When you look at the chart, here's my entry, 276, stop loss, 255, 20 cents per share, right? So that means if I lose 20 cents per share, 50 shares, it's 100 bucks, okay? I know what it is. Then, if maybe it's bigger, you can size up from there. But you always are thinking about the number, and then the trade plan bends to fit the number, not the other way around, okay? And here's my entry, here's my stop. Distance between them, we had it predetermined. So $100 max divided by that risk per share is 50 shares. Done, that's your size. Now maybe it's 500, maybe it's 5,000, maybe it's 50,000, but you know going in what your downside is based on the trade plan. Now that's the whole thing. Max loss divided by the distance to your stop gives you your share size. Practice it with clean round numbers like 100 shares, etc., until you can do it in your head in about 2 seconds. Because in the moment, you won't have that long. And here's why this is so powerful. Watch what happens when the stop is further away. So this setup puts my stop $2 away. Maybe it's a short squeeze. Okay, we give short squeezes way more room because they're so volatile. But we have that same $100 max loss. So 100 divided by 250 or by 50 is 50 shares. So again, in this instance, way bigger risk, but same amount of shares. But notice how the position size changes with the range of the stock. So you don't go in with too big a size. So always varies. There's a wider stop, fewer shares, but if my loss, if I'm wrong, still 100 bucks. Always 100 bucks. That's the beauty of it. The dollar risk stays locked no matter what the chart hands me. And real quick, if simple, useful stuff like this is what you're after, hit subscribe. That's pretty much the whole channel. Now, you probably heard the classic advice. Risk only 1% of your account per trade. And for a big account, sure, that's fine. But I teach small accounts. And for us, that rule kind of falls apart. Think about it. If you got a $2,000 account, 1% is 20 bucks, okay? You can barely take a trade for $20 of risk. You'll never get ahead. Anything under $5,000, I call a small account. With a small account, I don't use a percentage. We use the set dollar risk, okay? A fixed number. comfortable losing per trade, that you're comfortable losing per trade, because that's the only thing that actually makes and lets a small account grow. So the beauty is, when you do this, you know going in what your downside is, and it's always controlled, and you're not taking bigger trades or risking more than you want to. Now, the reality is, now guys, always be smart, be smart, be smart. The reality is that when you're trading with a small account, you're probably going to use a significant portion of your account per trade. It's just the reality. Now, be smart. I said it several times, but that's why we use the number instead of 1% of our account. You trade these volatile penny stocks with a 1% stop, and you're going to be out as soon as you're in. And here's something a lot of gurus won't tell you. There's no magic number. There's no single correct amount to risk. It depends on you, on your account, and honestly on your stomach. The right risk is the one that lets you sleep at night and lets your account survive a losing streak. Because you'll have a losing streak. Everybody does. Your size is so big that one trade has you sick to your stomach. It's too big, cut it down. There's no prize for risking more, and there's no shame in risking less. Here's a simple way to test it. If you catch yourself glued to your screen, unable to look away, checking the price every second, that's not focus, that's fears. And it's your size telling you it's too big. A trade you're comfortable with, you can actually go to the bathroom for a couple minutes and not freak out while you walk away from the computer. That's the tell. And don't think that the stops mattering once you got more money. This might be the biggest mistake I see. Somebody grows their account, gets confident, throws the rules out right out the window. Now, if your account gets bigger, your max loss is going to get bigger, but they kind of throw it all out and they just pile in with massive position sizes. And I'm telling you, it's just as easy to blow up a big account as a small one when you do that. Maybe easier, because now the bigger size kind of is normalized. No rules, losses too big, holding losers and hoping. That blows up a $50,000 account exactly the way it blows up a $500 one. The size discipline never goes away, not for anybody. Now, here's what all of this is really about. When you get down to it, it's not just math that's in your head. When your loss is already decided and it's small, something fundamental changes, okay? It fundamentally changes. You stop staring at the dollars tricking up and down. You stop panicking because you already knew what the worst case was. Listen, I like to approach a lot of these trades with just the expectation that I'm going to lose. Like I kind of go in accepting I'm going to lose. Here's my dollar amount. And when it works, all right, we did our job. It's kind of like Barry Sanders handing the football to the ref. But when we lose, I kind of had the expectation. I wasn't going to aim for the sky. I was going to have realistic expectations. So I lose, hits the number, no big deal. And that's when you finally start sticking to the plan instead of trading on emotions. Right size, calm mind every single time. So let's wrap up. You do not control whether a trade wins. You never will. But you control exactly one thing, 100%. How much that trade is allowed to cost you. Nail that, and you can be wrong over and over and still be sitting there a year from now, still in the game, still getting better. So before your next trade, pick your max loss first. Then do the math backwards. Then click buy. And look, knowing your size only matters if you actually honor the exit when it hits. That's my video on cutting losses, and that's where all of this starts, with the exact same stock and the exact same trade plan. It's right here. I'll see you in the next one.